So the market is, mathematically calibrated, and we always say this all the time. And you see the way that floor gave the roof, and this a bullish temporary channel on 30 minutes. It's a bullish channel, and you see the way market is reacting from there. That's why you see when price came there at 109, it has moved, and it's using there as a floor. It could from here and just print up. Very much possible, very much possible. And it could also adopt something like this. It based on the daily tick, it could it has given itself a reason to adopt it as the next sell zone. It could come here around 161 and drop from there. That's one case scenario, but I'm not judging it. So I already have something mapped up for the day, which I think has a very high probability of reoccurrence in the market. So let's see it if it plays out. So that's why you are seeing that shake over there. Now we are trading what the market gives. We are trading what the market gives. The market has presented itself on 30 minutes with a structure that is tradable. So we're leveraging on what it gave. Remember, that is the concept of the strategy. You trade what the market is doing. We are not speculating. We are not deciding. We look at what the market is saying. So if you look at what price has done here, and you clone that structure and you bring it on this rejection roof here, it's exactly the same thing here. Exactly. So this is pure mathematical calibration. So it was already pre-signed that market will sell there. Those who want it to be there have already made their mind that that is where they will take a temporary. And that was during a Asian session. They made that decision. So it was a clear mathematical calibration. And the next supply, which I'm expecting that a New York session will come, will be here. So New York might draw liquidity into 4,190, 192, maybe approximately 4,200. This is where I expect New York to draw their liquidity from. Expect New York to draw their liquidity on this roof. So what you're going to do is you're going to hold firm. I don't want to look back, but I've done the back check already and it's accurate. So technically, if we have seen what the price did here, and it feels very good to see that we're gradually getting to the point that trading is mathematics of demand and supply, and every tools you have here is for trading purpose. So the what we are maintaining here is one single trend angle. The trend angle is the same, and the price has not changed. If you change, we change. For now, you can see here now on 30 minutes we have a 30 minutes descending trend line, and price is respecting that 30 minutes descending trend line. On 30 minutes line chart close, it's respecting that analysis and it's dropping. And I do hope that buyers can wait here and defend here properly. This is a very strong floor for critical defense for the day. So if they come here and they defend here, that would be a must wait anticipated structure. If you look at it very well, so let's put it into perspective. We see here we create here a 30 minutes W structure. That is a bullish price action. Came back, retest the neckline, retested the neckline, retested it again, broke out of structure, turned a previous demand floor to a supply roof here on 30 minutes. And we came back, we respected that change in character. Here's a supply roof, here's a supply roof. We broke out of the structure, turned it to a demand floor. So technically, the market is still very much bullish. So what I think is, if price returns here, here should be a very nice technical ground to wait for buyers around. If we come back here during the New York session, New York come here. If New York comes here around 96, 96 is not bad for buy. 96 is not bad for buy, and it's not bad for buy. And if we are looking at possibly if they escape from that trend, they could seek stop at this trend. So they will be looking at temporary New York rejection here before moving back to 4,200. And if you look critically, you will see that price also has created a very famous structure here, double top structure, break of the neckline followed by a retest. And as the market opened during Sydney section, we found a reason to hold on to buy on 30 minutes. And the structure that gave birth to that price action is here. You can see it evidently as the market opens. You see that price have come here. Here, this line here, you see we have that's a double top structure, break of the neckline, retest 1, retest 2, retest 3, retest 4, breakout of structure followed by support. So this is another area where I expect that price can also come. So two areas of demand I'm seeing for today is if they fail to hold 96 responsible, they could come down into 74. But remember, we have broken out from the descending trend line pattern, and the price might not return back exactly on that breakout to retest. It might not do that. Yes, there won't be room for that. Price will not give us that room to do so. So we are trading a new structure right now. So what I see technically is that if this temporary 30 minutes bullish channel floor, which our price has been leveraging on 4,110, if price dips itself into the structure due to the descending 30 minutes trend line that has been stopping price, acting as dynamic resistance on intraday, if price pulls out of that structure, you will see that on both sides, the market is playing on a structure. On 30 minutes, is playing from the roof, is playing from the floor. So if we want another touch on the floor to get a decisive buy idea, then it has to be here. So if price pulls back, then it's looking for confluence. You see pulls there, it's part of that 90 is a confluence. 90 is 1995 is a confluence. 1995 is a confluence. So at 1995, you have a confluence at that level. So if he pulls into that structure, you see that it could come back here, take this thing away, then prepare itself to go parabolic fully into 4,195. Yes, and it does make sense anyway to even see that it aligns with the current, almost aligning with the current structure we have here. So if you want to make a zone from that resistance roof, it could technically be somewhere around that 4,185 into 4,200, where you see a potential break in price, and you see that guy coming down from there. So that's what I see technically, and what I just see is just interpretation of the market. And if it doesn't go that way, I mean, it's not my making that it didn't go that way, but I'm trying to see what price has done. This is what price has done at the moment. So it is what it is. So let's see if they are going to defend here. If they defend 96, 96 is a nice buy floor, and the next place is 480, 480, 480, and 96. So let me put it up. This is basically for educational purpose. 4,096 into 4,090 and 4,080 into 4,075. They are all demand floor. Target will be 4,200, 4,180. That will be our target on that move. On that move, if market moves from that zone, that will be our target. These are our target for today, based on all these numerous lines. I want to delete them, but let's just leave them for reference. This is just for educational purpose, and it feels good to see how we started it. So it is a key area we're waiting for price around 95, 95, 90. Then if price breaks away from there, returns to the origin of the rally, which is here, 78, 78 and 80. Feels good to see. If price returns there, honestly, it's going to be a buy, because look how price have formed here, resistance structure, breakout of two resistance structure, returns here as a demand floor, and we have seen by market open around 23.30. So price have moved. The price returns there, is price returning to where it started from, and it gives us a, now most likely at that level you could see a push, but there is a twist to it. If price comes here and break out from here, then it will return back to this floor. This floor is an ascending trend line on 30 minutes that have given birth to a bullish channel. So if price returns there, that's also a technical flaw to see. But at this level, buy momentum would have been reduced. It might go to retest and we end up on the sell side. Very much possible, because if that happens, that will be an indication that the market has lost all its gain. But where I intend to see a clear retest is somewhere around 4,279 on a daily time frame. There is a retest after breakout from an ascending trend line on daily time frame. So I want to see a retest on that zone. So at the moment, the market is peaking after breaking out from a long-term descending trend line. We expect some form of relief in the market. So that's what I see technically, and I do hope this happens. I just do hope that it happens. It doesn't happen, that's fine. It's for educational purpose.